Hello and welcome to this special report here at XM.com. We'll be discussing what's been happening to the Japanese yen recently and what the Bank of Japan might do when it meets in 2 weeks' time. I'm Maria Pachordes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, it has been an extremely difficult year for the Japanese currency. Can you tell us about why the Bank of Japan has not taken steps to stop the yen's bleeding?
Hello, Maria. I certainly can. So it's a simple calculation. Inflation in Japan is lower than everywhere else. So every major central bank in the world is raising interest rates right now to deal with inflation. So in Europe and in America, inflation is running around 8-9%. In Japan, it's just over 2%. If you look at the core measures that take out food and energy, they are around 1%. So there is no real inflationary pressure. And more importantly, if you look at wages, at inflation expectations, those remain very low. So there isn't much organic inflation in Japan. It doesn't look like this inflation wave is becoming entrenched. Instead, the Bank of Japan is looking at the whole situation and saying, this is a global supply shock. It's going to dissipate soon. Therefore, why would I tighten policy since there is no inflation to fight? Now, since they are keeping interest rates very low while everybody else is raising interest rates, that has widened interest rate differentials, and that is what has really crushed the yen this year.
Now, regarding FX intervention, how likely is it that Japan will intervene on its own without help from Europe or the US?
Well, Maria, to be honest, I don't think the Americans or the Europeans would help them. So in the past, when we had forex interventions, it was done in coordination with the Europeans and the Americans. But this time, I don't think they're going to help, because if they agree to help, that would imply that they have to weaken their own currencies, and that would amplify inflationary pressures in their own economies. So they are probably not going to do that. If Japan wants to intervene, they have to do it solo, and solo intervention implies a lower probability of success. It requires you to burn a ton of FX reserves to do so, and it could even backfire, because let's say you intervene and it's unsuccessful. That might give speculators the green light to start shorting your currency again. So there are a lot of risks with solo intervention, and the rhetoric is not quite so forceful yet. So in the past, right before interventions, we heard some very forceful language from the finance minister describing the yen's moves as disorderly. And after that, there would be some emergency meetings between the Bank of Japan and the finance minister to discuss exchange rates. It was really a warning shot to the markets. We are about to intervene, stop speculating. We haven't seen that this time, so I would argue we are still pretty far from intervention, and I think that they are really reluctant to threaten it because they know it will probably fail without global assistance.
Okay, now looking at the longer-term outlook for the yen, is there more downside in store?
Yeah, I think so, Maria. So right now what the market is doing is they're trying to front run what the Bank of Japan is going to do in 2 weeks. So the Bank of Japan, the Governor Kuroda spoke a few weeks ago and said, we are committed to ultra-loose policy. We have no other choice until wages and prices are rising in a sustainable manner. The implication is that is not happening right now. And in fact, Kuroda even said, let's say we raise interest rates a little bit, that's not going to stop the bleeding in the yen. And he pointed to other currencies. Look at other currencies that have raised interest rates, and they still got ravaged. So his point is, why would I tighten policy and harm the economy when that might not stop the bleeding in the yen? So in this light, it looks like they won't change anything this month. And the market is looking at all of that and saying, they're selling the yen, essentially. I think this selling can continue. There's a lot of momentum right now. And if you look at the charts, the area to watch is really in dollar yen. It's the 147 level. Now, in the bigger picture, Maria, I think that yes, we might see some more downside, but there are a few elements that could resurrect the yen as well. So for example, if we start seeing wages and inflation expectations creeping higher in the next few months, that could spark some speculation that the Bank of Japan might adjust its policy, might follow everyone else, and that could at least stabilize the yen. Now, on the other hand, the paradigm shift, the change could come from the US dollar side of the equation. So for example, if investors sense that the Fed is about to end its tightening cycle, or that the US economy is slipping into a recession, that would allow interest rate differentials to compress again, and that could help the yen. So we are not quite there yet. I think we are likely to see some more pain, but there is some light at the end of the tunnel.
Marios, thanks so much. And thanks for joining us for this special report here at XM.com.